Welcome back. Here we are, Josh. Tiff Macklem just made an announcement about the Bank of Canada's key interest lending rates. How are you, and what can you tell us?
What I can tell you today, Jay, is that the Bank of Canada cut its interest rate by another 0.25%. This was highly anticipated. Over the last 6 weeks, we've gotten a lot of data that has said maybe it wouldn't happen, but what the bank has been saying is that it was likely going to happen. What we're seeing now is the bank rate is now down to 2.25. That is different than the prime rate that we as consumers have access to. But it brings the bank's rate down to 2.25, and we haven't been that low since July of 2022, 3 years. So if you're in a variable rate mortgage, that's good news for you. If you are coming up for renewal in a fixed rate mortgage, this downward rate movement is good news for you. For those of you in a variable rate mortgage at say $400,000, we're looking at about $157 of payment reduction per month. This is good news if you're looking to borrow money. If you are borrowing money, it's nice having lower interest rates, but it's good news because of bad news. And the bad news is that here in Canada, the unemployment, it's really high. We're at over 7% nationally. Certain specific sectors are hurting worse than others. The energy sector, of course, in Alberta, we are struggling here. The manufacturing sector in Ontario is screaming that they're not being taken care of by the government. They, are losing auto manufacturing to the United States. Everybody's upset. This elbows up from earlier in the year seems to be a bit more elbows down. We don't have a lot of progress there. We don't even have a federal budget to help us get through this next phase. So there are absolutely struggles, and Canada's facing a difficult transition with the trade war in the United States, and really none of us has any idea what's going to happen there. Inflation feels a lot worse than the numbers indicate. If you've been at the grocery store recently, things are going up by a lot more than 2.4%. But September's inflation data did go up to 2.4% officially from under 2% earlier in the year. Yes, it's a lot lower than the peak from 3 years ago, but it's still too high for the Bank of Canada. And our GDP growth, that's the measurement of economic growth, we need it to be higher, especially with the unemployment where it's at, and negative GDP growth in the third quarter of 2025 is not helpful, and the bank is only projecting just over 1% GDP growth over the next this year plus the next two, right? So it's a pretty dire looking picture. The good news, I guess, is if you're fully employed and you're looking to borrow, the interest rates are lower, and that will work in your favor. If you're looking for work right now, if you're struggling, it's not good news. The bank is doing the best it can, and it's going to have to wait until we have some sort of federal budget, if we even get one here over the next little while. And we're going to have to wait and see.
Super interesting, isn't it? So I guess really, this is sort of history repeating itself too, Josh, because we went through this cycle and we've seen this big influx, and a lot of our first-time home buyers really did take advantage of this. So I think there's pros and cons for both sides of every story, right? History is looking to be repeating itself maybe, and there might be an opportunity coming up here, especially in Alberta, for some buyers. So let's keep track of that. For now, though, thanks for that update. You can reach out to us if you have any questions, of course. Real estate's with me, mortgage with Josh. We do have this first time home buyer webinar. We are running it again, and we would encourage you, if you haven't bought, you're interested in buying, reach out to us. We'll send you a link and you can come attend our next webinar.
Thanks so much, everybody. If you like this content, please click on like, subscribe, hit the bell for notifications, and maybe leave a comment to help the algorithm know to share this content with other people.